thank you all so much for spending a little bit of time with us this early afternoon, late morning on what is kind of a dreary day here in Minneapolis. So not a bad way to spend an hour to talk a little bit about energy efficiency tax credits and deductions. There you can see my contact information on the screen along with a horribly outdated picture. If anything pops up in the future, feel free to reach out to me via telephone or email. Happy to answer any questions that I can. So let's talk about today's agenda. Today we're going to give a brief overview of the 179D and 45L energy efficiency programs. We're going to first start with 179D, dive into the specifics of the program as it pertains both to privately owned buildings as well as the designers of governmentally owned buildings. Look through a couple of case studies. Then we'll move into a program commonly referred to as 45L, which is an energy efficiency credit specific to residential real estate. Again, some case studies for 45L. And then we'll take a look at the outlook for the future. And if we have any time at the end, we'll do a Q&A. And then obviously, if anything pops up after the fact, feel free to reach out. And what we're going to focus on, in addition to just the overview of these programs, is kind of focus on where the opportunities lie as we sit today. And we'll get more into that in a minute. So the whole idea here is you see this graph, the energy consumption in the United States as of 2018 was 101 quadrillion British thermal units, which is a lot. And that's actually up from 98 quadrillion in 2015. And if you can look at that pie chart there, real estate makes up a large percentage of that overall energy consumption in the United States. So the thought here is how do we slow the growth of energy consumption moving forward? So the IRS partnered with the Department of Energy back in 2005 to create something called the Energy Policy Act of 2005, commonly referred to as EPACT. And those were the genesis of both the 179D program as well as the 45L. And you can see the history of these two programs over the years. They are set to sunset after a certain amount of time, and they continually expire and are renewed. Undergone, looks like 5 expirations over the years. If you look at the very bottom portion of the slide, the spending budget deal passed in February 2018 extended the programs through December 31st, 2017. So as we sit here today, these programs are expired. But the good news is there is still plenty of opportunity, and that's what we're going to talk about today. So let's start with 179D. And so 179D is a deduction of up to $1.80 per square foot. Encompasses privately owned commercial and residential real estate over 4 stories, as well as industrial real estate. And there is also provision for governmentally owned properties whereby the designers of that energy efficient building property is eligible for the up to the $1.80 per square foot. So we're going to first talk about the program itself, kind of the certification process, the energy efficient requirements. And then we're going to go down the track for privately owned buildings. Then we'll backtrack a bit and go down the fork that pertains to the designers of governmental buildings, which for my money, I think is pretty interesting. So qualification requirements. So in order for a building to qualify, you need to demonstrate some energy efficiencies over a standard, right? And the standard was created by the American Society of Heating, Refrigerating, and Air Conditioning Engineers, or ASHRAE for short. And you must demonstrate a 50% energy use, must be 50% or below a reference building as it pertains to ASHRAE 90.1. The energy savings is split into 3 categories. The envelope, so think walls, roof, windows, things of that nature. HVAC and hot water, mechanical system, as well as the interior lighting. And each one of those systems is worth 6 cents a piece for a total of $1.80 per square foot. This next chart here, we won't dive into it too deeply, just have it on the screen to demonstrate. There are two ways to certify a building or get to this to prove out these energy efficiencies. There's something called the fully qualifying property or whole building approach, or partially qualifying property. And so when you're looking at a building to try and obtain the 179D deduction, really where you want to start is you want to start with the whole building approach. You want to say, okay, we have this building. Can we demonstrate that the building as a whole with these three systems has an energy efficiency of 50% or greater over the ASHRAE 90.1 standard? If you can, then fantastic, you're entitled to the $1.80. If you can't and you come up short, maybe you're in the 40 percentile or 30 or whatever, then you'll start to take a look at component by component. Take a look at the interior lighting and say, all right, how energy efficient is that compared to the standard? How does the HVAC and hot water compare? And then what does the envelope compare? And so it may be a situation where of those three building components, maybe two out of the three, the lighting and envelope, qualify. And in that case, you'd be entitled to $1.20 per square foot deduction. So the certification process, how do we go through and demonstrate that this building or our building has that energy efficient properties that we have? So the very first step is an analysis of the blueprints and specifications to kind of do a provisional analysis to ascertain if this project might have value or could potentially qualify for a portion or maybe the entire $1.80 per square foot. A site visit is always required on every single project to ensure that the energy efficient property is installed and that the blueprints are an accurate representation of what is actually put on site. And then energy simulation, modeling using IRS approved software. And that list of approved software can be found at energy.gov if you're interested. And there's a whole list of softwares out there, and different softwares are qualified for different projects placed in different years, placed in service. And some popular ones include the eQuest, you'll see a lot, and Trace. By a qualified individual, the project needs to be, and a qualified individual is simply a professional who is not related to the taxpayer and who is a licensed engineer or contractor in the jurisdiction of the building being certified. So if you were, let's say you were an engineering firm and you have professional engineers on staff and you built yourself a new office building, you would be unable to do that final certification for yourself. You need to find that independent third party. So the strong positive factors, strong indicators of at least partial qualifications, no secrets here. I just wanted to draw your attention to the bottom, the LED lighting. When projects come across my desk that where specifications call out LEDs, that's a very strong indication that we're looking at hopefully at least a partial 60 cents per square foot certification, and hopefully that full $1.80. There are other strong indicators. For instance, if there's a level of LEED certification, obviously it's not an apples to apples comparison, but typically LEED projects are very good ones to look at as well. The negative factors, we don't need to walk through these there, but obviously the less energy efficient, the harder it is. The only reason I bring this up is because what I see often is, and what I caution you against, is if you are undertaking or looking at a project, what you don't want to do is you don't want to pre-disqualify yourself. And what I mean by that is if we were to look back at that table, that qualification table from a few slides ago, we would have seen that ASHRAE 90.1 standard. And there are two standards that the 179D program is based on, depending on when the project is placed in service. So any building that was placed in service prior to January 1st, 2016 is based on the 90.1 2001 standard. Any project placed in service after after January 1st, 2016, you bump up to the 7 standard. So let's say hypothetically you place a building into service in December 5th, 2015. So that building that was built in 2015 is now subject to or is compared against the reference building, the ASHRAE 90.1 reference building that was hypothetically constructed in 2001. So 2001 versus 2015. If you think about the improvements in building sciences over those 15 years, again, LEDs, mechanical and the like, and even local building codes, the improvements that were required over that period of time, there is a strong likelihood that there may be some opportunity, deduction opportunity there for you, even if the project, for instance, is not LEED certified, or maybe you didn't do triple pane windows. So any provider, or most providers, will typically provide a provisional analysis to kind of give that cursory overview to make sure that the project has merit, and should be able to take a look at that for you relatively quickly, and hopefully for a free or a very small amount of money.
First polling question. What's the maximum deduction available for 179D? The polling question will appear on your screen, and if you do not have access to answer it, please refer to the email that was sent out yesterday. Your computer, your internet settings might not be compatible with Zoom.
Okay, fantastic. Yeah, 78% chose $1.80 per square foot, which is right on the money. All right, so now that we've talked about a little bit about the energy standards, let's now go down that path specific to privately owned buildings. So how does one claim the deduction if it's a privately owned building? The good news is once the certification process is complete, the actual incorporation into the tax return is quite straightforward. If this is a current year project, meaning a building that was placed in service this year, taking advantage of taking advantage of the tax savings for this current year, all one needs to do is enter into, I believe it's row 19 there, yeah, other deductions. Just entered in, the 179D deduction is entered into the other deductions row 19, with the attachment. Now, obviously, considering that the program is currently expired, any project that you undertake now, privately owned, would be what we call a look-back study. And so a look-back study requires Form 3115, automatic change of accounting form. So there's one additional piece of paperwork that's required, and for your accountants out there, it is change 152. There's also, in conjunction with the 3115, a 481 adjustment is required, and what that does is it redoes the math on your fixed asset or depreciation schedule to include the calculation of the catch-up deduction to incorporate the depreciation that you were entitled to but had not yet taken. All it does is it eliminates the potential for double dipping that depreciation going forward. So a couple of case studies, privately owned buildings. There you can see a distribution center. This is up in the northern climates, 116,000 square foot building, qualified for that full $1.80 per square foot, yielded about a $209,000 deduction for the owner. Along those same vein here, you can see about 150,000 square foot building. I believe this was in the Pacific Northwest. You'll notice that the windows, the U value and solar heat gain coefficient, not that great on the windows, but we were fortunate there with the other building components making up for the windows to qualify the entire $1.80 per square foot for about a $269,000 reduction. So not bad. So we've spent the first 15 minutes or so talking about the program as a whole, the energy efficiency requirements, and then we talked about how it pertains to privately owned buildings. And now we're going to get into what I think is kind of a more interesting opportunity, or kind of a more interesting, kind of more fun talk of an opportunity specific to designers of governmental buildings. And so a quick overview here is a governmental entity, whether it's a school district, a county, the federal government, whomever, obviously has little to no use for deductions. But at the same time, the government is one of, or maybe the largest building owner in America. And so to allow them to participate in the program and have energy efficient real estate is important as well. And so there's a provision in the code that allows the deduction to be assigned from the governmental entity to the quote unquote designer of this governmental building, or the energy efficient property within the governmental building. We'll spend a little bit of time on what designer means and the mechanics of that. But the difference, all of the energy efficiency requirements are the same as the privately owned. right? The 50% component by component. But there are some differences in that the 31, if you were to do a look back study, it is not a 3115 change of accounting form. It's actually an amended return. And you are, in that it's an amended return, you are limited to an open tax year. So because as of today, we talk about what opportunities do we have with the programs today. As of today, for most of the folks on the call, they'd be limited to projects placed in service in either 2016 and 2017, because those will most likely be still open tax years. But because the program has not yet been extended in 18, those are not yet applicable to 179D. And so if I look over to the left, and you'll see allocation letter. An allocation letter is the mechanics or the mechanism that transfers the deduction from the governmental entity to the designer of the energy efficient commercial real estate. So let's take a look here. How are we doing on time? We've got a little bit of time. Let's spend a couple minutes walking through this form because it is important. It's vitally important that we understand this. So if I take a look at section 1, authorized governmental representative. And so the authorized representative from the government is really any person who's familiar with the project and has the ability to verify information such as the completion date and cost of the project. There's no bright line test in that it needs to be the superintendent of the school or the project facilities manager of the jail or whatever that is. It just needs to be a person familiar with the project and has the ability to verify information. The designer information is the second section there. That is the individual or the firm who is going to be claiming this deduction. The third is just the address of the building. Finally, the fourth is the cost of the property. So the deduction for both, the deduction amount is capped at the lesser of $1.80 per square foot or the cost of the property. Fifth is date placed in service to make sure that we're in that open tax year and in a year where the program is active. Section 6 there has the ability, the governmental entity has the ability to split the deduction among several designers as they see fit. You can see here this is pre-filled with up to $1 per 80 per square foot of qualifying space. 7 is the signature of the designer, and 8 is the signature of the governmental authorized representative at the governmental entity, along with a little blurb starting with, under penalties of perjury, I declare, et cetera, that verbiage needs to be in every single allocation letter. And so a little bit of education might be required if the representative of the governmental entity isn't familiar with the program. Sometimes a conversation is warranted just to kind of walk through exactly what are we doing, what are we actually doing here. How do I claim these deductions and who is eligible for the deductions? So I'm going to take a look and direct your attention to that second paragraph and try and understand, all right, who is a designer, right? Who's entitled to this deduction? Because this is an area where we have a lot of conversations and there's some misinformation and there's a lot of other good information running out there. So I typically don't like to read verbatim, but in this case, we'll see a designer is a person that creates the technical specifications for the installation of energy efficient commercial building property. Designer may include architect, engineer, contractor, consultant, energy service provider who creates the technical specifications for a new building or in addition to an existing building that incorporates energy efficient commercial building property. If we were to continue on with that paragraph, that comes right out of, I believe it's Internal Revenue Bulletin 2008-40. It'll go on to say something along the lines of an individual that simply installs, repairs, or maintains the energy efficient property is not a designer. So you really need to demonstrate that designer status. And we'll talk more about that here in a minute. Let's talk about examples of a designer. And so this information in the following 3 slides will come from Office of the Chief Counsel of the IRS. And this is a memorandum 2018-005 that was released back in December. And if anyone's interested in this and has a is just curious. It's actually really interesting reading, and what it does is it lays out a number of scenarios along with kind of the services stands on each. And what I did was I just cherry picked a few of them that we can walk through that I thought looked kind of interesting and were maybe a little bit outside of what I might have thought to be the case. And so these memorandums, you know, they're certainly not tax law, but I think we can feel good about using them as guidance as to what's the positions the service will take. So if one were ever to come under examination, it's obviously impossible to say definitively what any IRS agent will do, but it's highly unlikely that they'll contradict this guidance, assuming they're aware of it. So again, sometimes some education is required. So let's take a look. Scenario 2. An architect designs a shell only, doesn't do anything with the HVAC and hot water, and doesn't do anything with the interior lighting. Through the allocation letter, they approached the governmental entity and was granted the full $1.80 per square foot. Because it's either typically a first come, first serve situation, or at the governmental entity's discretion, they can assign the deduction across multiple designers. It's kind of a hit or miss situation. In this case, they applied for the full $1.80 and got it. After the fact, maybe an engineer or a consultant came and also asked for this same deduction, but were denied because it was already taken. So the analysis laid out by the chief counsel was like, all right, the architect provided the design specs for the building envelope. And because they provided the design specs for pieces of energy efficient commercial building property, they are now a designer. So even though they did not have any input or any involvement in the HVAC or interior lighting, they were entitled to that full $1.80. Along those same lines, let's take a look at scenario 7. In this case, it was a lighting firm that went in and did a lighting retrofit. Was asked for and was granted first the full first 60 cents, and then came back and said, all right, because we're a designer of the lighting, we think we should also be entitled to an additional $1.20 for the other two components. The analysis, and this I thought was very interesting and not what I would have guessed. The lighting firm actually was entitled to both the original 60 as well as the continuing $1.20. And you can see the analysis down there. They were in fact a designer. And so the big takeaway there is that for me, the definition of designer as it pertains to 179D is binary, right? Either you are a designer in that you have created the energy specifications for a piece of the qualifying systems, or you're not. And if you are, you're entitled to up to $1.80 per square foot, but that $1.80 per square foot is solely at the governmental entity's discretion. Scenario 8 that I thought was quite interesting as well. You can see a mechanical engineer hires a subcontractor to install an energy management system. It includes the mechanical, elevator, interior lighting, etc. That same subcontractor who designed the EMS was allocated was allocated $1.20 per square foot. So in this case, even though they did not actually design the specifications for the lighting or even the actual physical equipment, HVAC and hot water equipment, because they designed the controls that powered these items, they were a designer as it pertains to this program, and were entitled to the deduction. If, for instance, you'll see building automation systems whereby maybe the building automation system only controls the exterior lighting and the elevators, maybe a bad example, but you get the idea. If that were the case, then they did not design anything that was used in conjunction with the energy efficient commercial building property as it pertains to the program, and would not be considered a designer in this case. All right, let's take a look at a couple case studies for governmental properties. So here is a fine art center. This is a new ground up construction. There you can see the building highlights. In this case, it was an 80,000 square foot building, and it qualified for the full $1.80 per square foot. And this yielded us about a $144,000 deduction for the designer. And so if you kind of juxtapose that to commercially owned buildings, whereby you can almost think of on the privately owned side, rather, on the privately owned buildings, where it's almost accelerated depreciation, where it's almost a timing difference, right? You're going to, assuming you hold a commercial property for 39 years, you will at some point realize the deduction that you could have created with a 179D study. On the governmental side is because you're not depreciating a piece of real estate, it's a little bit different, and it's actually quite a bit better, in my opinion, in that it's not a timing difference, right? You're not getting this 1/39th of the building's value depreciated over time. You get this 104, in this case, $144,000 deduction for the designer right up front. Here's an additional case study. Now, this is a renovation of an elementary school, kind of a rural elementary school in the Midwest. And this was a situation where at the outset, it looked like kind of a marginal candidate. If you were to see pictures of it, it certainly wouldn't look like a bleeding edge school in terms of energy efficiency. Obviously, it was a nice location and one that I'm sure the kids loved and the staff loved, but it wouldn't appear, at least to me, to be, again, on the bleeding edge of design. They went through and did some renovations, and I believe this was an engineer, an HVAC engineer, who actually claimed this deduction. And there you can see again, a 41,000 square foot building yielding $1.80, which at the end of the day came up with a $74,633 deduction. So here is an additional case study on the governmental portfolio. And this is kind of actually really where I think it really gets interesting for controllers and CFOs and the like out there, to really be proactive and do some tax planning and see where 179D might fall into play. And this is kind of a big part of my job, whereby we'll take a look at a portfolio of projects that were designed and placed into service, in this case in 1617, and look at each one of these projects and kind of flesh it out and say, all right, based on what we're seeing here, we think that this building will qualify for probably this partial, this square foot deduction, and this here are kind of the tax ramifications based on an assumed marginal rate, and along with the tax savings. So you can see there are a whole host of opportunities there for the designer of governmental buildings. Maybe draw your attention to a couple of them here. Let's see, parking garages, for instance. This is one of those freestanding open air parking garages, the fifth row down. You can see there 250,000 feet per square foot deduction of 60 cents. In this case, for parking garages, you obviously, because it's not conditioned space, the walls and roof aren't airtight. You're limited only to the lighting. And more specifically, it's the lighting on every level except for the top. If you can see the sky, if you look up and can see the sky, that square footage doesn't count. But if you look up and see precast above you, then that's when you can get in that 60 cents per square foot. We'll take a look at maybe student housing as well. 3-4 rows down, 115,000. That project qualified for full $1.80, which yielded a $207,000 deduction and an call it $87,000 tax savings for the owner. There's a dead spot. I just want to draw your attention to this because there's kind of a dead spot. There are a couple dead spots in the program. The first one is for governmentally owned residential real estate of 3 stories and below. So we'll look at 45L, which is specific to residential, in a minute. But in this context, if it's a governmentally owned building, and you'll see this maybe in barracks or long-term military housing or student housing that are 3 stories and less, there's really no mechanism. It's kind of in that twilight zone where it doesn't qualify for 179D, and it also does not qualify for 45L. The third zone here that's kind of a dead one is this program is specific to governmental entities, nonprofits, hospitals, nonprofit hospitals and the like. Unfortunately, even though they too have very little need for the deduction, that is an area where you're just out of luck. Hopefully in future future versions of the law, that will be rectified, but that's where we are at currently. So some key takeaways here. And again, we want to stay focused on the areas where you could add value or where you have opportunities today. But we're looking at $1.80 per square foot deduction. And on the privately owned buildings, we are looking at any building that was placed in service 2006 through the end of 2017. And again, you're able to go back all the way to January 1st, 2006 using a 3115 and Form 3115 and 481A calc to take advantage of those deductions. On the governmental side, you're limited to an open tax year and prior to 2018. So in this case, for the majority of the folks on the call, that would mean the tax years 2016 and 2017 with an eye and a fingers crossed to an inevitable extension for the 18-19 tax year. Building requirements, because this deduction or incentive is based on a per square foot basis, and there are obviously fixed costs involved, specifically a visit. It's not a requirement, but typically the bigger the better, and building, call it 50,000, maybe for other folks that number drops to 20, 25,000, will yield a benefit worth pursuing. If anyone is ever interested, we'll take a look and do a provisional analysis and kind of scope it out and let you know where we think that building might fall, with the understanding that a final site visit modeling would be required. All right, so we had a chance to take a look at 179D and a deduction of $1.80 per square foot for both building owners as well as designers, and now of commercial industrial real estate as well as residential, 4 stories and above. And now we're going to look at another provision in the code, commonly referred to as 45L, and that's specific to residential real estate. This could pertain to both single-family homes as well as townhomes, apartment buildings, and the like, 3 stories or less. And dissimilar to 179D, which is a $1.80 per square foot deduction, this is actually a $2,000 credit per qualifying unit. So $2,000 per apartment unit, $2,000 per home, et cetera, et cetera. Similar idea, you must meet certain energy efficiency standards. So let's walk through some of these. So 45L requirements. Energy use must be 50% below a reference unit, below the reference unit, right? And in the same way that the reference building or the reference unit is modeled on the ASHRAE 90.1 standard for commercial, for 45L, the reference unit is modeled after the EECBP, or the International Energy Conservation Code, and that's the 2006 standard. So quite a bit back in time. We mentioned there's a $2,000 per unit credit for that real estate. There's also a separate provision that comes up from time to time, specific to manufactured housing. The manufactured housing can demonstrate a 30% savings, not a 50, but only a 30% savings below the reference unit. Then that unit is eligible for a $1,000 deduction. Doesn't come up often, but good to know. So in this case, we talk about building components, but on the 45L, the envelope is much more important. I shouldn't say much more important, plays a larger role in the program and the energy savings. And in fact, it's quantified in that the envelope must account for at least a fifth of the reduction of the energy. So dissimilar to that whole building approach we saw in 179D, in this case, if the walls, windows, and the like can't pass muster, it doesn't matter how energy efficient the HVAC and hot water is, or how energy efficient the interior light is. It's very important that we take a look at the, initially look at the envelope as it pertains to 45L. So this is going to sound quite similar to what we looked at 10 minutes ago, or 20 minutes ago now. The certification process includes a provisional analysis to see if this project might have benefit to pursue. And then assuming it does, energy simulation modeling using approved software is required. REMRate is by far the most popular software on the 45L space. A site visit is included, and including the site visit is a blower door test is required. And I don't know if you are familiar with the idea of a blower door test, but it's pretty interesting. What happens is they seal up. We seal up the vents in, let's say, an apartment unit, and then put a blower door, put a kind of a fake door with a fan that blows out, and it creates a small vacuum in that unit. And what happens then is it measures the air infiltration, or it measures how tight that unit is, how much air is leaking into this unit as they create this small vacuum. And then based on the tightness of the building, the project may or may not qualify. So it's a little more cumbersome. It's a little more cumbersome to go and certify these programs, or I'm sorry, these apartment units, in that you need to walk around with all of this heavy equipment. The good news is one does not need to actually do this site visit or do the blower door test on every single unit. On an apartment complex, you can take advantage of the Energy Star statistical sampling guidelines. And so typically it varies, but you might have to do, let's just say, 1 in 7 units to qualify. You might have to test 1 in 7 units to qualify, as opposed to every single one. Finally, certification must be done by a residential energy services network professional or equivalent. And again, ResNet is by far, ResNet and RemRate are by far the two most common players in the space. So positive factors, we talk about hydronic heating, reflective coatings, especially in the southern climate. In my neck of the woods, obviously up in Minneapolis, attic insulation is quite helpful. Now there are no guarantees here, but it's certainly helpful if we see some of these building components. Negative factors. So it really makes it tough. Specifically, and I certainly don't want to put the kibosh or make anyone discouraged in pursuing this 45L credit, but things like ducted electric heat systems up in the colder climates really make things hard. Through wall ACs, the same idea. You don't see these much anymore, but you see when you have an actual unit that penetrates the exterior wall, and the AC is controlled from the inside, but there's a portion of it that goes outside. That makes it very, very tough to get that tightness. When we talk about the tightness on the blower door, makes it really, really tough for that project to qualify. And then obviously in the southern states, warmer climates, SEER rating on AC units is just absolutely critical. Absolutely critical. And so just similar to the 179D, the 45L is slightly, in my experience, is slightly more challenging to qualify for. But it's a situation whereby there is a high enough benefit typically to pursue it and at least go through the mechanics and just see where your numbers shake out.
All right, our last polling question. What's the maximum credit available for 45L?
Okay, fantastic. Yeah, that's exactly right. $2,000 is the maximum credit amount for 45L, with small provision on manufactured homes where the maximum there is $1,000 a unit. So that is fantastic. All right, we'll move on. So let's see, how do we actually claim the credit, right? Once we have the project certified, in the same way for 179D, we have the project certified and signed off on. Excuse me. Now, how do we certify, or how do we claim the credit on the tax returns? So you can see Form 8908. It's a little small for you to see there, but it's really quite straightforward. You enter the number of qualified units, multiply that number by $2,000, $2,000, or in the case of manufacturing by $1,000, sum those numbers up, and put your number right in there. So from there, it's a pretty easy deal. And you can see some caveats there, specifically on the right side. The 45L is similar to the governmental entity designer program for 179D, in that this is not a change of accounting method 3115 to go back and claim this credit. One actually needs to go back and amend the returns. It's a little bit different. Unfortunately, it's not a straight 3115, it's actually an amendment. So let's take a quick look at a case study. Here you can see a 56-unit townhome complex. I want to say this is out in the, I think again, in Pacific Northwest. You can see the complex features. We won't walk through them. But the results here of the 56-unit townhome complex is 100 units, 100% of those units passed, which created $104,000 in credits for 2016. So if you're still with us and paying attention after the 47 minutes, you can probably say to yourself, well, wait a minute. If it's a 56-unit complex and 100% of them qualified, 56 times 2,000 is 112,000, not 104,000. And that's exactly right. The difference here is that in this case, only 52 of the 56 units were leased up in 2016. And so the 45L is not based on a placed in service date necessarily, it is the occupancy date. Oftentimes we'll use the lease up date, right? When was the lease signed? And so in this case, they were able to lease up 52 out of the 56 units in 2006. And then the next year in 2007, the remaining $8,000 credit, or the remaining 4 units were leased up, and that remaining $8,000 credit was taken in 2017. And that's pretty common. So we'll talk about the key takeaways here if we can. We have, for 45L, a $2,000 credit per qualifying unit. So you must be a privately owned building, residential, 3 stories or less. And that could include an underground parking garage, but it needs to be 3 stories or less above grade. Must be substantially complete in an open tax year and leased up in an open tax year. And prior to 2006, 2017, apologize for the typo there. And then there are buildings with 10 or more units. It's not necessarily a requirement, but it certainly yields a better benefit in that there are, again, fixed costs in order to go out to the site to do the provisional analyses and then go out to do the site visit and the blower door tests. The more is typically better. Plans and specs are always required to do provisional analysis. So that's kind of the opportunities as they lay today. All right, so both on 179D as well as 45L, privately owned and publicly owned governmental. And then let's take a look at the outlook for the future, because when we started about an hour ago, we talked about, well, shoot, this is a program, or these are programs that have expired. So what can we do today, and what can we look for in the future? And so outlook for the future, the ideal outlook for the future is some legislation that was unveiled back in very late February by the finance chair, Chuck Grassley of Iowa, and Ron Wyden of Oregon. Interestingly, Chuck is a Republican and Ron is a Democrat, which is positive. And they introduced the Clean Energy Act of America. And so the Clean Energy Act of America, among other things, extends 45L and 179D in their current form for the next 3 years, and then it changes 179D and 45L to a slightly different standard and makes both of those programs permanent. And you can see for new construction, it's a sliding scale of $1 to $4.25 per square foot of qualifying real estate for new construction. And then the renovation, it goes from $1.20 all the way up to $9.25 per square foot deduction for renovations. And that's kind of the way. I won't bore you with the gory details on these two programs, but it's kind of interesting the way it's laid out. To me, it really makes a ton of sense in that it looks at, instead of looking at a reference building, what it does on the renovation side, it looks at your prior energy consumption and says, okay, you're consuming X BTUs currently. if you make these improvements, what is your reduction in energy consumption? And based on the amount of energy being, or based on the improvement, it's a sliding scale that ramps all the way up to $9.25 a square foot. So if that were the case, it would really, I think, the programs would really operate in the way that they were originally intended, in that folks can introduce or incorporate these potential tax savings into their design at the outset, as opposed to after the fact, going back to, in this case, 2016, 2017, or prior, and say, all right, well, we built something that we think was pretty good. Maybe now we'll get a benefit for it, but we weren't necessarily banking on it, or we didn't put it into our budget, right? I think that would really be kind of an interesting thing. Obviously, if you don't want to get political on a call like this, but we'll have to see how that all shakes out. And the way that Washington is, we can keep our fingers crossed and maybe reach out to our Congress people and get in their ear a little bit, but we'll have to see. Similar on the 45L, the maximum credit in this case would bump up to $3,000 per qualifying unit specific to renovations. And again, that's on a sliding scale. That in a perfect world, boy, that would be great. That would make my life quite a bit better. My life is great. That would make this portion of the job quite a bit better. So that would be the ideal, but here is kind of the realistic outlook for the future. And this is relatively recent. This is a late addition to the slide deck. So the thought now is maybe to pair this extension of the 45L and 179D along with the additional extenders programs, to pair that with the expansion of an earned income tax credit. And so we need to balance that out, or at least theoretically balance that out. So the way that is proposed to do that is to sunset the estate tax exemption early, taking it from sunsetting in 2025 to 2023. And so by doing that, by saving those 2 years, an estimated $83 billion of savings would be achieved, which would more than pay for the $47 billion cost of all of the extenders. Right? I think that's probably what we're going to see happen, or something close to those, something close to that. And with the hope being that there's currently 6 bipartisan groups looking at all of these 40-some extenders, of which 45L and 179D are a part. And they're looking at all of these and saying, all right, after this 2-year extension, which ones of these have run its course and should be eliminated, and which ones should be made permanent? Hopefully, we'll get to some finality there, and both 45L or 179D are made permanent in a perfect world, or possibly, unfortunately, maybe fall off the table. But hopefully within the next period of time, we'll have some certainty as to what may happen moving forward. So that's kind of the end of my talk here. What I wanted to do is just really quick touch on some additional business trend webinars coming up. You can read them here. They are all quite good. I'm specifically interested in the one on June 14th to look at how to use my data to drive results. And the methods one is always great. If you have an interest, check out eidebailey.com/business.trends to sign up for those if you so desire. And with that, Amy, I think we have a couple minutes left if there are any questions.
Yeah, there's one question. Is there a limit to the number of deductions or buildings a designer can take?
No. The short answer is no. It becomes kind of a business decision at that point, right? So if you were to go out and be the designer on, I'll just pick a ridiculous number, 1,000 buildings for a year, and that would yield let's just say a $10 million deduction. Does that $10 million deduction benefit you, both in the short term, this tax year, or because it's a one that you can carry forward for the next 20? Do you plan to use that deduction up over the next 20 years? Right? Now there's a slight change with the tax reform for projects that were placed in service in 18, which obviously will fall under a different set of rules. But to answer your question, there's no hard and fast, there's no rule that says, you know, you can only do it for 20 buildings a year or 10 buildings. It's just whichever projects you are a designer on, and then you get back to that tax planning piece of the equation. What makes sense for me and what makes sense for my firm, and how does it fit into my overall strategy? Nice question.
Okay, the next question here, can a building benefit from both utility incentives and tax deductions?
Yes. The short answer is yes, absolutely. There are many dozens of utility incentive programs in our neck of the woods. Xcel Energy has a whole host of programs that marry quite well with 179D. They're two different things. So qualifying for 179D will not necessarily mean that you'll qualify for an energy incentive through your local utility, and vice versa. But there's a strong correlation between the two. In the same way, there's a strong correlation between LEED certified buildings and 179D. If you're energy efficient, you'll probably start being able to start stacking up those incentives, whether it's tax deductions or utility incentives. And those utility incentives throughout the country are so all over the map that it's hard to say definitively. You know, if you're Con Edison has this, so you qualify for that. There's just too many variables. But the short answer is there is a high correlation, and you can absolutely take advantage of both.
All right. What happens if the amount of tax deduction is greater than the designer fee?
Sure. So you are limited to the lesser of the total cost of the energy efficient commercial building property and the product of the square footage times $1.80. So you'll notice there I didn't say the designer fee. What I said is the lesser of the cost of the energy efficient commercial building property. So HVAC, walls, and interior lighting. So it could be a situation, and again, I'm just going to make up numbers here. Your design fee was maybe $100,000, and you designed a 100,000 square foot building, fully qualifying, that yielded $180,000 deduction, right? So you charged 100, but there's $180,000 deduction available. In this case, assuming that the total cost of the energy efficient commercial property, right, HVAC, envelope, and lighting is greater than the $180,000, you're still good to go. You're entitled to that full $1.80 per square foot, or $180,000.
Awesome. That was our last question.
Okay, look at that. We hit it by less than a minute. That's great.
Awesome. Okay. Well, thank you so much, Joe, and everybody have a great day.
Thank you so much.